Well, we just came off of Giving Tuesday, which was a couple days ago before this was released, and got us thinking about giving a little bit, how to donate maybe a little bit smarter, right? But before you hit that donate button this year, we want to talk about how you can both give with your heart and with your head, because generosity feels even better when it's part of a plan. Welcome into Perfect Game Retirement. Ben George with Ryan Ledden at Black Oak Asset Management. This video is going to be all about how to give a little bit smarter. We're all generous this time of year, Ryan, right? But it's always, look, it's good to balance. Hey, you want to help out those people that are important to you and those organizations that are important. But if you can do it in a way that is more efficient for you, that's a win-win.
Yeah, the biggest thing is to plan for it, because I get it, rising costs and just buying gifts for people that we're buying for the holidays. Those things add up. So you need to have a plan for how much you're spending on your own immediate family, but as well as hopefully you're charitably inclined, and a lot of our clients are, but hopefully you're charitably inclined, and that way you have a plan for it, and take advantage of not only, just like you say, with your heart, but also, okay, let's get a tax deduction if we can.
So today we'll kind of work through that a little bit and talk about giving in general. Hopefully you got that in mind this time of year as we approach the holidays, or whenever you listen to this. It's always important to give back. So today's episode is all about that. If you have questions for Ryan, we always encourage you to get in touch. You can always get the contact information in the show description, as always. But we want to start here, Ryan, with just talking about the why, right? I mean, that's kind of what you got to begin with. And it's a lot like planning in general, right? You kind of have to know what the goal is before you start.
Yeah, the why. I mean, there's so many different good charities out there. Obviously, the most top of mind for a lot of people are the churches that they attend and go to. And I know the church we go to, we're part of the North Point cluster here in the Atlanta area. And they do a big drive during this time of year, and a lot of nonprofits do, but especially this time of year, there's just so many people in need. So you want to give with your heart first, and then maybe your wallet second, but you need to have a plan for that. So staying connected with those charities. We had a person at our church talk a few weeks ago, and that guy was one of the sharpest people I've ever heard speak in my entire life, and it was an inner city charity. And in like the amount of money that guy probably got donated to his organization was like, you know what, that guy can give it away way better than I can. So you just hear stories like that. So you want to give with your heart, and then again, your wallet from a tax standpoint comes later. But that way, you give money to an organization and you stay connected to them and really see what they're doing. It's awesome.
Yeah. So it begins with a why. What's important to you? Kind of identifying that will kind of help you be intentional with the money, and how you're going to be giving it away, and also let you kind of track the progress and achievements of that organization as you move forward. So after the why comes the win, Ryan. I know maybe Giving Tuesday kind of sparks that. The holidays oftentimes gets people thinking about being a little more charitable and giving back. But what does the timing look like in terms of kind of when you're giving these gifts? Is it throughout the year? Is it a certain time? Does it matter?
Yeah, I mean that triggered, Giving Tuesday that just passed. That kind of triggered the topic of this show, because I used to be on the board of a nonprofit for several years, and finally I kind of was rolled off the board. But just we made plans for this Giving Tuesday. What are we going to do social media wise? And so it does pick up a lot toward the end of the year. Sometimes there's been people talking about, because of our tax code, because of the standard deductions being so high, that you don't really get as much tax benefit. That's going to come later. We'll talk about that in a second. But sometimes people toward the end of the year, they kind of see, okay, there's where I'm at from a tax standpoint. How can I help offset that? But again, it goes back to the heart issue. Do that first, but come up with a plan. And it can be throughout the year. It can be toward the end of the year where there's a big push for that. Again, expenses increase for ourselves toward the end of the year usually. So sometimes that may be a little bit harder as well. And we'll talk about here in a second, as you get older and you're giving out of maybe your pre-tax accounts, your IRAs, that's another a way to do it. When it comes to the win, you can give at an older age at 70 and a half, you can give through your pre-tax IRA. So again, we'll get into that in a second, but the timing doesn't really matter as much as far as the planning goes. But again, this time of year is more charitably inclined, and usually those pick up, they ramp up toward the end of the year.
All right. Well, you kind of talked about this a little bit when you talk about taxes, and this is a big part of kind of being smart about the way you do it. Is kind of answering that question of how much. And I know you look at the deduction right now. It's a pretty big deduction for most people that are using the standard deduction, but there are some
Mm.
above the line deductions as well, right? To be aware of.
There is, and I kind of wrote some notes down because the new law is going to come into effect next year, and it changes a little bit. So for people who itemize now, it's a little bit more advantageous to give in 2025. Not that it's bad to give in 2026, but it may be. And they call this term bunching. So you may want to put a large amount aside and maybe a donor advised fund, dump it in this year where you may get a bigger tax benefit, and then you can give that money away out of the donor advised fund at a later date. And again, we could have 3 shows on donor advised funds, but we'll talk about that more in a second. But again, for next year, if you do the standard deduction, next year it's a little bit more advantageous. So you get $1,000 for a single filer above the line, which means it comes out first, and then you get the standard deduction. For joint filers, married filing jointly is $2,000. So right now it's a little bit lower than that now. So next year is a little bit more advantageous for people who do not itemize, who use the standard deduction, which again is a majority of you probably watching this. For myself, like a small business owner, we itemize every single year. I mean, it's not even close because of run things through a business, and then charitable giving. We give a good bit to our church as well. So for us, it's more advantageous to itemize and then give on top of that. But one little thing I'll touch on for those of you, and I'm getting my numbers right here, so I'm looking at my notes here. So for next year, if you itemize, you can deduct 0.5% of your AGI above that. So it's like a floor. So 0.5. So for an example, if you make $200,000 of income and you give away 10,000 bucks, so the 0.5 of AGI, that's the floor. So the first $1,000 in that example for a $200,000 income earner, and they give away $10,000, that first $1,000 is not deductible. But the 9,000, the rest of the 9,000 or the rest of the 10,000, which is 9,000, that is what is deductible. So they have this kind of floor, and then you can give above that. So a little bit complicated, but again, that's kind of where it's at. And then also, if you're in the 37% tax bracket, it's not going to be deductible at that 37%. It's going to be deductible at 35%. So again, higher income earners, people who give a lot, may want to kind of get that money in for 2025 and then give it away later. But again, those of you who use the standard deduction, probably a little bit more advantageous to give away next year.
It's never simple, right? It's just that's why you want to have a professional on your team, because you're kind of working these numbers. I'm sure just the average person that doesn't pay attention to this stuff is trying to just figure out, wait, what are we talking about here? But look, there are reasons and there are strategy behind the different types of giving. So again, that's kind of why we ask that question, how much? And again, if you want to talk with Ryan, go to speakwithryan.com. You can begin talking about this a little bit more detail, talking about your overall plan and how this giving fits into it, but it can get a little complicated. All right. So let's talk about the what. What do you give? Now, I know most people just say, I'm going to give cash, right? It's very simple. That's just the top of mind thing. But you talked about it a little bit, the different ways to kind of maybe structure these gifts to give a little bit more effectively. So what are some of the ways you can do this?
Yeah, like you said, cash, that's the easiest one, whether it's check or you do automatic contributions or donations, I should say, on a monthly basis. Everyone's wired a little bit different when it comes to that. My retirees out there, anyone over 70 and a half, you can do QCDs. Okay, so qualified charitable distributions. So you can start that at 70 and a half. Now I know your R&D age for a lot of you is going to be at 73 and beyond, but you can start giving money out of your pre-tax IRA. And get the tax, and you don't pay any taxes on it, and then the charity doesn't pay any taxes on it. But if you're at R&D age, required minimum distribution age, which for most of you is going to be 73, is you can give away your R&D, and it checks the box with the federal government that yes, I did my required minimum distribution, and you don't pay any tax on it, and the charity gets it tax free. It's like a triple tax benefit. So if you are of RMD age and you are charitably inclined, please, please, please give from your pre-tax IRA. There's no reason why you should give it from your checking account. So again, talk with your advisor, reach out to us. We'll help you set that up. It's easy to do from our end. It's just a lot of people don't know about it. That's one way. Also, again, I mentioned a second ago, a donor advised fund. So that's an account you can open up and give into that account, and you get the deduction for it. Again, it kind of goes back to that whole 0.5 AGI floor. Again, another conversation for another day, and work with your CPA and your advisor with that. But you can put money into a donor advised fund. You can invest it how you want to. So that can be opened up at Fidelity, Schwab, Vanguard, whoever you want. And you can invest that money and you can give it away later when you want to. So it provides a ton of flexibility, and you get some deduction. And if you give it away right, then you don't really pay taxes on the capital gains either. So it's a really, really cool account to give away to a charity. And it can, if you put gobs and gobs of money in there, it can last beyond your lifetime as well, and you can continue to give out of it. So really cool legacy thing there. Donor advised fund or QCDs are great ways to give away to charities.
Yeah, and that's the goal, right? Is to make sure your generosity kind of goes beyond just this Giving Tuesday or this year, right? We want it to be long lasting and far reaching. And I want to kind of close out with that, with what you talked about just a second ago, Ryan. It's like, who can help you out here? And I know you obviously and your team at Black Oak Asset Management can help identify what strategy is best for you, help you create these different different tools to help you give. And then you also want to work with a qualified tax professional as well. And you kind of do that in your business, right? You have those relationships.
We do. I mean, we can help everyone in-house here because we partner with a firm. I don't prepare taxes, but we partner with a firm that helps our clients, and they prepare their taxes for them. So you can do some tax planning at the end of the year. That is something that is offered. And again, these accounts that we talked about, the donor advised fund, we can help out with that and set those up. Again, the qualified charitable distribution, we help people out with that. We just need to know the specifics of the charity. It's got to be a qualified charity, and for the most part, if you're given to a 501c3, that's going to be a qualified charity. So we just need to know the specifics about that charity, and we hold our clients at Charles Schwab. So Schwab has a form that you fill out the specifics of it and how much you want going out. It's easy from our end. You just need to know about it. Most people don't know about it. So I'm in a small group at our church, and one of the members there is works for the church, and he's just like, man, we just need to push more for the QCD, especially for the older population, because again, you can't do QCDs before 70 and a half, but those who are older and are taking money out, you can give out of a pre-tax IRA. So huge tax benefit there. So, but yeah, we can help our clients with the tax planning side of it and just the account side of it as well.
All right, very good. Well, when we get in touch, go to speakwithryan.com. You can get on Ryan's schedule, have that kind of intro meeting, discovery meeting, talk about some of these things that are on your mind, what your goals are, and begin talking about how to move forward with the planning process. Again, speakwithryan.com, all the contact info in the show description. If you've enjoyed this video, if this has been helpful for you, please subscribe to the channel as well. We appreciate that support. Like the video, leave a comment if you have something on your mind as well. We'll check those. But Ryan, appreciate it. Thanks for walking us through this, and hopefully you'll be giving this season as you're watching this, and hopefully do it a little bit more strategically.